The 2026 FIFA World Cup is the largest single economic stimulus event happening on Earth right now, and most people watching the games have no idea they're also watching a $40 billion financial rescue operation unfold in real time. That's not a sports number. It's bigger than most government stimulus packages passed since the pandemic, and it's already moving through financial systems you are personally inside. That $40 billion headline number isn't one thing. It's 3 separate revenue machines running simultaneously, and each one is bigger than the last time you saw anything like it. Start with the broadcast layer, because that's where the money is most visible. FIFA is expected to earn around $8.9 billion in total revenue from the 2026 World Cup, with media rights alone set to exceed $3.8 billion. To put that in perspective, that's more than the entire annual revenue of most mid-size media companies, generated from a single tournament. Fox's approximately $480 million deal was negotiated as part of a multi-tournament extension back in 2015, long before streaming platforms became serious players in live sports. In other words, Fox locked in that price when Netflix was still mailing DVDs to people's houses. Fox's deal concludes with the 2026 tournament, and FIFA is expected to seek significantly higher rights fees in future cycles as streaming platforms increasingly compete for live sports rights. The broadcast layer isn't just big, it's repricing in real time, and every dollar of that repricing flows directly into the financial systems we'll get to in the next section. But broadcast is only the first machine. The second one is corporate sponsorship, and this is where it stops looking like a sports story entirely. FIFA's partner list includes Adidas, Coca-Cola, Visa, Hyundai Kia, Lenovo, Qatar Airways, and Aramco. As of early 2026, all 16 global sponsorship positions had been filled for the first time in the tournament's history. Every single slot sold out. No 2 brands at the same tier compete in the same product or service category. Visa's payment processing position is protected from MasterCard. Coca-Cola's beverage exclusivity is protected from Pepsi. And sponsors are not just buying eyeballs, they are buying a category monopoly over the most watched live audience on the planet for the duration of the tournament. That's the corporate speak translation for what's actually happening. These companies aren't advertising at a soccer tournament. They're purchasing temporary monopolies over consumer behavior at a global scale. Sponsorship is contributing approximately $2.4 billion to FIFA's revenue, anchored by long-standing commercial partners including Adidas, Coca-Cola, Visa, and Hyundai Kia. And that $1.9 billion flowing to FIFA is just the fee. The ad buys, the manufacturing orders, the retail supply chain activations those sponsors trigger in the 18 months around the tournament, that's a multiplier on top of the fee that doesn't show up in FIFA's books at all. Then there's the third machine, and this is the one governments sold to their own citizens. The tournament is projected to generate $40.9 billion in global GDP impact, with host cities across the United States, Canada, and Mexico spending years building and renovating stadiums, upgrading transit infrastructure, and expanding airport capacity, all approved because a soccer ball was attached to the budget line. That's not a cynical framing. That's just what happened. Infrastructure spending that would have faced years of political resistance sailed through approval processes the moment FIFA's name was on the proposal. The corporate speak translation for that is government stimulus that got sold as a sporting event. Here's the gut punch that ties all 3 layers together. Advertisers are committing $10.5 billion globally to this tournament, surpassing NFL regular season spending. The NFL, the most commercially dominant sports property in American history, just got lapped by a tournament that most people couldn't have named a single host city for 2 years ago. And the timing of all this is not an accident. This tournament is landing in the middle of the shakiest consumer spending environment since the pandemic recovery, and the governments and corporations who engineered it knew exactly what they were doing. The $40 billion doesn't flow because people love soccer. It flows because 3 separate revenue machines, broadcast, sponsorship, and infrastructure, were deliberately stacked on top of each other to function as a coordinated economic system. The question now is, who actually collects the check when it clears? That sponsorship sellout, every single one of 16 slots filled for the first time ever, tells you something real. Do you think these brands are here for the love of the game or purely for the category monopoly? Drop your answer in the comments below. Because who actually collects the check is exactly where this gets uncomfortable. The answer comes in 3 layers, and they are not equal. FIFA collects first, and it collects almost everything. In 2026, for the first time in World Cup history, FIFA is operating the tournament itself, dealing directly with host cities, and under that arrangement, it controls essentially all of the revenue, from media rights and sponsorship to ticketing, hospitality, and merchandise. The corporate speak translation for that structure is a franchise model. The franchisees pay to operate the business, and the franchisor keeps the receipts. FIFA is projected to generate somewhere between $11 billion and $13 billion from this cycle. To put that in perspective, that's more than the annual budget of several mid-sized federal agencies, and it flows to an organization that pays 0 corporate income tax in most jurisdictions because it's classified as a non-profit. The biggest stimulus event on Earth in 2026 is being administered by an entity that is technically a charity. The second layer of collection belongs to the sponsors and broadcasters, and this is where it becomes personal to you. FIFA's partner list includes Adidas, Coca-Cola, Hyundai Kia, Visa, Aramco, Lenovo, and Qatar Airways at the top tier, with second-tier sponsors including McDonald's, Anheuser-Busch InBev, Bank of America, and Verizon, all US-listed companies. Coca-Cola trades as KO, Visa trades as V, McDonald's trades as MCD. Every single one of those tickers sits inside the S&P 500, which means they sit inside every broad index fund and ETF that tracks it, which means they sit inside your 401, whether you chose them or not. Sponsorship is a marketing cost and rarely moves a megacap's earnings on its own. The smarter watch is medium term, the engagement, payment volume, and sales lift that show up in the quarters after the final whistle. The Q3 earnings season starts in mid-July, right as the tournament ends. The revenue from this tournament will be booked, reported, and reflected in share prices while most people are still thinking about the final score. Then there's the third layer, the host cities, and this is where the math gets genuinely uncomfortable. FIFA's contracts assign security, transportation, stadium retrofits, administration, and public fan zones to the localities, while withholding access to the revenue streams, tickets, sponsorship, and media that might offset them. The host cities will absorb costs that can run well over $100 million each, while capturing none of the revenue streams that might offset them. And local expenditures per city are estimated to land between $100 million and $200 million on top of that. And the jobs those cities were promised? Hotels, restaurants, and other businesses can charge premium rates during major events, while workers' wages often remain largely unchanged. The stimulus trickles down to the fan's own hot dog vendor. The profit margin gets booked in Zurich. Research found that 12 of the last 14 World Cups produced net economic losses for their host regions. 12 out of 14. And yet every city that signed the hosting agreement signed it anyway, because FIFA's name on a budget proposal clears political obstacles that nothing else can clear. Some cities did the math early. Chicago, the third largest city in the United States, chose not to host World Cup games because Mayor Rahm Emanuel said FIFA's demands put the city's taxpayers at unacceptable financial risk, taking all the costs while FIFA kept all the revenue. Chicago opted out. The cities that opted in are now holding the bill. You've been watching a financial transfer mechanism dressed in jerseys. FIFA captures the revenue. The sponsors book the earnings into indices your retirement account already tracks. The host cities absorb the costs and service the debt. And the $40 billion headline, the one that sounds like a win for everyone, describes the gross flow, not who keeps it. The World Cup is the biggest stimulus package of 2026, and you already paid for your share of it. You just didn't get to choose which side of the ledger you were on. Subscribe if you want more like this, and watch the next video on screen. It goes even deeper.